After climbing to record high levels over the past several years, the stock market set a milestone of a different sort in 2018. Its first negative year in a decade. In this morning's U.S. Bank Economic 360, U.S. Bank Senior Vice President Mike Denneman is here to talk about the market's loss and what it means for investors. He is with Business Courier publisher Jamie Smith in the studio. Mike and Jamie.
Thanks, Peg. Mike, thanks.
Good morning.
Now, you've been spoiling us the last several years, or I guess the market has.
Right.
We're not used to this negative stuff.
No, you know, as Peg said, the first year in a decade with a negative return. In fact, we need to go all the way back to the financial crisis in 2008 was the last time that the market was in negative territory for the year. And even that was just a one-time thing. You know, the financial crisis did, you know, extend into 2009, but by the time we got to the end of 2009, it ended up being a positive year for the market. And so that was the start of this tremendous bull run that we've been on. Every year between 2009 and 2017 were positive ones for the market. Sometimes big gains, sometimes not so big, but everyone was positive. And to the tune of a gain of, total gain of 250%. So just a huge increase from the financial crisis. And then 2018.
So what happened in 18? What do you say causes it?
Well, you know, you could point to a lot of very broad things or a lot of very specific things. It's a combination, of course. On a very broad basis, you know, important to point out that we were kind of on borrowed time to begin with. You know, the market extending this bull run for 9 years, that's the exception. That's an especially long rally for the market. You know, on average, every 10 years of the market, you'd expect 7 of them, maybe 8, to be positive. And here we'd gone 9 in a row without a decline. And so, you know, we were kind of overdue, if you will. Of course, being overdue is not really a very scientific, you know, analysis, but there were other things that crept in, especially at the end of the year. Worries about a slowing economy. You know, tech stocks that had really driven the market were starting to stumble. You know, the volatility came back, this erratic market. And then on top of all of that, we talked a couple weeks ago, the Fed decided to go ahead and raise rates anyway. The market reacted very negatively to that. So any chance we had of pulling out a positive year, that kind of died once the Fed did their thing.
Yeah. So moving forward, is this a negative? I mean, are we looking at it as a negative sign?
Well, you know, a couple things to keep in mind. One is that even though it was a negative year for the market, it wasn't a particularly bad year. The decline was less than 5%. So it wasn't a terrible year. And even the entire year wasn't all that bad. I mean, at the end of the third quarter, we were sitting on a gain of about 6 or 7% for the year at that point. So the question becomes, well, what happened in those final 3 months to kind of derail the market? And the answer is, you know, those things we mentioned a minute ago notwithstanding, not a whole lot. You know, if we look at the broader picture, things are still pretty good. The economy's doing pretty well, corporate profits pretty well, unemployment low, inflation low, gas prices low. The holiday shopping season was tremendous. And so all of these are positives for the market. So as long as that stays intact, it could turn out that this is just one of those temporary tantrums that the market goes through every once in a while. But important to point out, it was enough and at the right time to push the market underwater for the year. And so we broke that string of consecutive winning.
Yeah, well, as you pointed out, and they pointed out in our prior segment, there's a lot of development still going on.
Absolutely.
So I think we have a lot of things to keep us positive, right?
We're crossing fingers.
All right. And you'll keep an eye on it and keep us informed, right?
Absolutely.
All right. And I have to comment on that great tie you have on today. Right, Kentucky.
Citrus Bowl champs.
All right. Mike, thanks so much for being here today.